Welcome back, guys. We are here with another video, and today I'm breaking down the 7 habits of highly successful DeFi liquidity providers. Without further ado, let's jump into it. Make sure to subscribe as well. Over a third of you watching this video are not even subscribed to the channel. Make sure to subscribe below, hit that bell notification icon as well, and let's talk about these 7 successful habits. Okay, so we wanted to curate these 7 habits of highly successful DeFi investors because after working with hundreds of clients one on one, there is certain patterns that begin to emerge with DeFi investors. And for you today, we're providing you with these insights so that you don't have to make the mistakes that hundreds, if not thousands, of DeFi investors have done and made before you. So if you can learn from the mistakes of other people, that's what I want to try to communicate in today's video and share these 7 habits to steer you in the right direction. Okay, when it comes to DeFi liquidity provision, habit number 1 that is very important here is keeping some dry powder on the side in the form of stablecoins. What do we mean by that? Well, when providing concentrated liquidity, it's very possible that eventually you are going to go out of range, either on the upside or on the downside. In that scenario, you're going to have to execute a rebalancing strategy, and keeping some stablecoin capital on the side for those eventualities means that you're going to incur locking in impermanent loss if you don't have that dry powder ready. It also is very helpful for if the market pulls back and you want to buy the dip. It's never easy to predict the perfect top or the perfect bottom in any market conditions. But if you have some stable coins on the side, you're going to be able to use that dry powder to buy the dip if the price of Ethereum comes back down, let's say, to this $2,400 area. Rebalancing strategies means that you can inject USDC that you have on the side into your pool to avoid selling that ETH at a loss if we come out the bottom of your range. Again, we go into those rebalancing strategies in much more detail in the UIG and in the fast track program, so make sure to check the links for those below. But keeping some stable coins on the side for buying those dips and for executing rebalancing strategies is habit number 1 of highly successful DeFi investors. Okay, habit number 2 is that you prefer consistent cash flow versus chasing high APRs. This is one of the biggest problems that we find with especially newer DeFi liquidity providers. And don't get me wrong, it can be very lucrative to see very big percentages here on aggregators like Crystal or other protocols, even in DeFi Buddy. When you see these numbers like 3,900% APR, 1,200% APR, those numbers can look very enticing. But under the surface, are these assets even assets that are going to be around for 2 or 3 weeks at these kind of sustained price levels and these sustained yield levels? I would prefer sticking with the blue chips, sticking with Bitcoin, sticking with Ethereum, sticking with Solana, the assets that we know we don't have to take huge amounts of risk with and can still generate very consistent yield over time. Because yes, these numbers look great in practice, earning 1,900% APR from RLS, but I've got no idea what RLS is. Is it a meme coin? Is it a token that's just part of this pump and dump narrative and it's going to be gone and go to zero in 3 weeks? It's not worth you risking your capital in those types of opportunities, and preferring steady, consistent yield over a long time horizon is a very good habit to get into versus chasing those short-term high APRs. Okay, that is habit number 2. Habit number 3 is setting reasonable ranges and not getting too greedy. This is probably the second biggest problem we see beginners getting into. And if I clean up this chart here very, very quickly, what I'm referring to here is setting your ranges excessively narrow. Okay, when you set excessively narrow ranges, yes, once again, it's going to squeeze your yield potential much, much higher on a percentage basis. But when you have excessively narrow ranges, it means the likelihood of you popping out of range to the upside or downside is much, much higher. And you end up having to excess rebalance your position. What happens when you have to excessively rebalance your position? Well, it often leads to you actually incurring and locking in losses because of that impermanent loss And when you have to do that too frequently, it simply eats into the higher percentages of those fees that you're making, essentially negating them. And you would have been better off to go with a wider range in the first place to stay in range longer, get those fees, and be much more profitable. So don't set your ranges too tight. I know those high percentages can be enticing, but in the medium term, it's going to work against you, and you'd have been better off setting a slightly wider range to begin with. Okay. Habit number 4 of highly successful DeFi investors is maintaining healthy loan to value ratios. Now, this comes in two different forms. Again, you might be using some treasury assets like Bitcoin, Ethereum, or Solana and borrowing some stablecoins against it and putting those stablecoins to work in liquidity pools to generate cash flow. And that's a perfectly reasonable strategy, but depending on the volatility of the underlying collateral asset, you're going to want to make sure that you maintain healthy loan to value ratios. Again, probably only borrowing 20 to 30% against those assets is going to be wise to account for volatility that can happen in the market, meaning that if Solana, Bitcoin drops by 20, 30, 40%, you're still nowhere close to liquidation because you have very conservative and very healthy loan to value ratios. The second area where this can come into play is for more advanced DeFi liquidity providers. When using protocols like Revert Finance or DeFi Tuna, you can use leverage on those positions to actually be more capital efficient and generate more yield based on your personal margin. Okay, that introduces loan to value risk as well, because you're borrowing capital to lever up those pools. You are going to have a liquidation price on the asset, and it's up to you to manage that liquidation price, setting limit orders if necessary, and monitoring the health of your liquidity pool over time when using leverage and not getting greedy, not using excessive leverage. Okay, maintaining those healthy loan to value ratios, whether setting up a simple lend borrow or whether creating leveraged liquidity pools on DeFi Tuna or Revert, is very, very important and should not be overlooked. Okay. Habit number 5 of highly successful DeFi investors is maintaining security best practices. Okay. We teach this in the program, we teach it in the UIG and also with the Fast Track group using a hardware device. For example, I've got a Trezor here that I use as my daily driver for executing swaps and trades and doing DeFi liquidity provision in the world of decentralized finance. Using other protocols, to basically revoke and remove permissions from your wallet, your software wallet, whether it's Rabi, MetaMask, etc., on a weekly basis, is maintaining security best practices in terms of the health of what you're doing. Okay, there's more and more sophisticated hackers and nefarious actors in this space. As much as DeFi evolves, as much as you have these protocols improving over time, so too are those nefarious actors. They're getting better, they're getting more sophisticated, and you're always just one click away from potentially having issues. So maintaining security best practices by using a hardware device, cleaning your wallet on a weekly basis, revoking permissions is what you need to be doing to ensure everything remains healthy and that you are on the track to earning very solid and healthy yields. Habit number 6 of highly successful DeFi investors is tracking your performance meticulously. Okay. When providing liquidity, you are earning fees in your pools in quasi real time. Every minute you're seeing fees being earned, and it's up to you as a liquidity provider to determine, when am I harvesting those fees? When am I actually realizing those gains and tracking them properly? Because it's one thing to dump a whole bunch of capital into a concentrated pool. It's another thing to truly understand how much you're earning on a daily, monthly, and yearly basis in terms of APR percentages. If your goal is to be generating 5% per month in cash flow on deployed capital, you need a way to track that. We provide multiple different resources in the Fast Track program and in the UIG so that you can meticulously track results on what you're getting from those pools. And obviously, building DeFi Buddy is another arm to that component for tracking things, using the wallet tracker, and eventually being able to simulate pools is very, very useful for understanding the actual results you're getting, actual yield earned versus capital deployed. And the clients who see the best results for us are the ones who get very, very meticulous about tracking those liquidity pool results. Finally, number 7 is reinvesting intelligently. What is the point in earning all of this capital from DeFi liquidity provision if you don't use it or reinvest it intelligently? Okay, this is going to be a little bit different for everyone because some people want to use some of their cash flow for lifestyle expenses. But if you're able to reinvest and compound some of that capital intelligently, most people are using a lot of this capital that they're generating from pools to build more of their treasury assets. They're using it as a mechanism to keep dollar cost averaging into Bitcoin or to keep dollar cost averaging into Solana or Ethereum. Okay. By using daily and weekly cash flow, every week you're earning US dollars, you're able to use that to continue DCAing and building your treasury of Bitcoin and Solana for the long term. Again, think about where we're going to be in 5 years or 10 years with the price of Bitcoin, Solana, Ethereum, and the actual blue chip assets in this space. If you can consistently DCA and reinvest your pool capital intelligently, you're going to be set up for success in the long run, and you're going to see your portfolio compound and increase in US dollar terms over the coming months and years. So those are the 7 habits of highly successful DeFi investors. Let me know in the comments below, guys, what other habits do you think should be on this list? What other habits are you using as best practices for your own portfolio? I want to hear from you in the comments below. Make sure to like the video, make sure to subscribe, and we'll catch you in the next one.